What have you heard today from China's leaders about their priorities for shoring up the economy?
So, Matt, we heard from Premier Li Keqiang, who had an opportunity to flesh out some of those priorities. And what he wanted to start off by saying was what they didn't plan to do, China's officials, which was and is to flood the economy with liquidity, he said. He simply said that that wouldn't be effective and it would shore up problems longer term. He said the focus and the priority for officials here was fiscal support, particularly for the private sector. And he talked again about these tax cuts that were outlined just over 10 days ago, tax cuts that were worth about $300 billion US. He announced that they're going to be kicking in from the 1st of April, part of those tax cuts. This is a 3% cut to VAT. That's part of the package, and that's going to really impact manufacturers. He also talked about the fact that they want to focus on these targeted measures. So he talked about additional cuts to reserve ratios for the banks. We've seen 5 of those since early 2018. He said that could be another option as well. So this was Premier Li Keqiang trying to lay out a policy prescription as, of course, a lot of the data, and we saw that yesterday, is still looking fragile here in China, whether that's the retail sales numbers or the industrial production numbers. And of course, as these trade conversations continue and the impact of tariffs and weaker demand here continues to take its toll on the economy.
Tom, good morning to you. Many in the markets, of course, looking for this some resolution in these broader trade tensions between the US and China. They take many forms, of course, but foreign investment into China is one of the areas that the US wants to see change around. So how does the new foreign investment law that we've heard about in the last week or so, how far does that go to addressing US concerns?
You're right. This was a real focus for foreign investors and foreign executives looking at the events unfolding over the last 10 days here in Beijing. They fast-tracked this foreign investment law, largely, we suspect, as a result of their attempts to try to show to the US that they are really going to make an effort to level the playing field. And what officials have said about this new law is that it is going to do exactly that. They're going to ban, for example, forced tech transfer. They're going to allow foreign businesses to be viewed by local governments and others as on an equal footing as Chinese companies. There's even going to be an appeals system for foreign businesses if they get denied a contract, for example. Now, the response from the lobby groups here, the likes of the American Chambers of Commerce, has been one of caution, to say the least. They're skeptical about the wording, the broad wording of this law. They're concerned about how it's going to be implemented. And frankly, they say that it simply doesn't go far enough to address some of the long-standing issues. So there's other small matter that the 300,000 or so joint ventures that foreign businesses have here with their Chinese counterparts may well need to be rewritten, the contracts around those, over the next few years, and that could throw up a whole load of other complexities. So, yes, it's about how this law gets implemented. It's been met so far by the business community here with a sense of caution, at the very least. They want to see how this is pushed through. So whether or not it goes far enough to address those US concerns is still an open question, I think.